Guys, it is 2024 and it is the beginning stages of the bull market. I believe, as well as a lot of large institutions believe. So in this video, I'm going to show you my step-by-step take profit strategy for how to turn $50,000 into $2,150,000. My step-by-step strategy. And this is by making an investment in Pendle Finance. So before we get started, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only. And like we always say, do your own research, but use this channel as a starting point. So guys, in this video, we're gonna briefly cover what Pendle Finance is and what problem they're solving. And I say briefly cover because I made a video on covering all things Pendle Finance, like literally everything you need to know. So feel free to watch that. The link is in the description. We're gonna go through the tokenomics to justify if it's actually a good investment to buy the coin. I'm gonna do a price prediction. I'm gonna show you my exact step-by-step take profit strategy on how you can turn a $50,000 investment to a $2.1 million investment. And at the very end, I'm gonna show you my yield farming strategy so that you can see how you can accumulate Pendle Finance passively so that you can have more to sell once the price targets that I'm gonna show you in this video is reached. So without further ado, let's get into the content. Okay, so real quick, what is Pendle Finance? Pendle Finance is a DeFi protocol that is bringing an aspect of traditional finance to decentralized finance that doesn't quite exist yet, called bond stripping. So Pendle Finance allows you to separate the yield from the actual bond, right? And this allows you to do a lot of different hedging strategies. But the revolutionary thing about Pendle Finance is that not only do they allow you to speculate on current yield, but they allow you to speculate on future yield. And you can't do that in the traditional bond stripping world. And what I really like about this is that the success of this protocol is not dependent upon bull and bear market conditions. Like the bond market is always gonna have some kind of activity in it. And especially right now, when we're in this environment of high interest rates. All right, so Pendle has three main components, three main parts. They have their yield tokenization, they have VE Pendle, and they have their actual Pendle AMM decentralized exchange. So let's briefly go through the benefits of these. So in regards to the yield tokenization, they wrap yield bearing tokens in what's called SY, or standardized yield tokens, which is a wrapped version of the underlying yield bearing token that's compatible with the Pendle AMM, aka DEX. The SY token is then split into its principal and yield components, principal token or PT, and yield token YT. This process is called yield tokenization, where the yield is tokenized into a separate token. You can buy and sell yield so that you don't have to hold the token to earn yield. This already exists in TradFi, like I said, and it's a core component that DeFi does not have yet. So this allows you to earn a fixed yield on something like, staked ETH. You can long yield if you feel like the yield's going to increase in the future. Like I said, you can't do that in the traditional bond stripping world yet, or can't. So you can bet on staked ETH yield going up by purchasing more yield, and then you can earn more yield without additional risk. So like providing liquidity in staked ETH. So now let's talk about the Pendle AMM and the benefits of that. So basically this allows the principal token and the yield token to be traded via the AMM. And the cool thing is that understanding of the AMM is not required to trade the principal token and the yield token. And this is good because it eliminates confusion. And the DEX functions on the back end while users just come on and swap. So you don't have to know how to work Uniswap. You just have to know how to use something simple like Coinbase. They made the interface really, really simple. And I think that's important because the confused mind always says no. And now you don't have to go externally and trade the PT and the YT. You can do it right on their DEX. And then lastly, you have VE Pendle, which stands for Voted Escrow Pendle. This is their governance token that's bridging traditional finance interest derivatives. And this market right now is worth over $400 trillion. So they're bringing a $400 trillion market to DeFi that has something new that you can't do in TradFi. And this new thing is only going to help institutions better assess that risk. And one thing about institutions, they're not worried about finding the next 10, 20, 30, 40, 50x. They're more so worried about maintaining. Like once you get to a certain point and you're managing other people's money, they're more so worried about what they can lose versus what they can gain. So, derivatives are literally the best financial products used for hedging. And there will always be a need to hedge risk, no matter if we're in a bull market, a bear market, or a sideways market. So now that we covered that, let's look at Pendle's tokenomics and see if this is actually a good token to buy. Okay, so for some reason, CoinGecko and CoinMarketCap is showing different numbers, but let's just go with this one because it's going to allow us to be more conservative with our take profit strategy because it's a higher market cap on here. So as you can see, Pendle Finance has a market cap of 299 million, but the fully diluted valuation is 326 million, right? So what that means is that 94% of the total supply is already on the market. So there isn't a lot of unlocks that's going to happen to pretty much dump the price. So that's a really, really, really good thing. So if you look here, you can see the token distribution. So you had 10% go to incentives, 65% circulating supply, ecosystem fund 19.2%, and only 5.7% went to the team. And guess what? All the tokens are already unlocked. So guys, you normally don't see that kind of thing. With a project this solid, tokenomics usually aren't this good. So this is a rare find for sure. Now, the only thing I don't like, any new tokens will be used for incentives and ecosystem building. And they don't have a treasury, which is good. Most projects have this huge treasury, and that can cause a lot of people to not want to buy the asset because they know that the treasury can dump at any time. This project doesn't have one. So the incentives are really, really aligned here. The only thing that could be a negative, even though I think it's a good thing, they do have a 2% inflation rate, but they don't have a burn rate. So, there's no cap supply. So 2% is going to increase annually, but they're going to use it for incentives. But I think that's good because they're essentially going to be able to pay people so that they're incentivized to use the platform. So, at least it's not just going to the team or, it's not just tokens being printed out of thin air and not used for anything. And 2%, that's not a super high number. I've seen projects that are worse with way higher inflation rates, and I'm sure you have too. However, here's a really, really good thing. With VE Pendle, you can stake your Pendle to get voted escrow Pendle, and now you can vote on how rewards gets used. But the average lock duration is 429 days, right? And when this picture was taken a few weeks ago, you have $21.8 million in Pendle lock, and this is only increasing. So all the tokens are unlocked. It's a 2% inflation rate used for rewards. The team got a small portion, and now you have a fuck ton of VE Pendle being locked because people want to have a say in what's going on. All these things are super, super good for the tokenomics because if you have a bunch locked, that's less that can be sold onto the market. So these tokenomics are some of the best that I've seen in crypto, just fantastic. Okay, so now that we went through the tokenomics, let me give you guys my price prediction and my justifications as to why. So I said that they're allowing you to do bond stripping, but instead of just being able to speculate on current yield, you can speculate on future yield, which institutions are going to love and are already loving. By the way, in 2020, the market for strip bonds was around 1.5 trillion and is expected to be 2 trillion by 2025. So that means if Pendle Finance just captures 2% of the entire bond stripping market, which is a drop in the bucket, that can bring their market cap to a $30 billion market cap. I think realistically it can get to 5% of the bond stripping market just because they allow you to speculate on future yields, and I really feel like institutions are going to fuck with that heavy. That can bring the market cap up to a $75 billion market cap. But I just always like to be conservative, so I'm saying 30 because I feel like that's my worst case. And as you guys are going to see, because now we're about to go to the take profit strategy, I have it set up to where whether if it's 30 or 70, I'm still taking profits as things are going up in a conservative way, but not so conservative to where I can't make a lot of money. So let's go through the take profit strategy step by step. All right, guys. So right now, the price of Pendle Finance is $1.29. And if we see the market cap go from what it's at now at $308,895,646, and it goes to 30 billion, that's a 97x from current price, pretty much 100x. All right, so now let's go through this. You're starting off with $50,000. My first take profit strategy is going to be when they do a 3x. And I bought Pendle below this price, so I just wanted to start off with an even number, 50K, just for easy math's sake. If you guys watched the Pendle Finance video that I did and you bought then, you're already up over 100%. So if so, give yourself a pat on the back. But going back to this, my first take profit strategy is going to be when they do a 3x. That's going to turn the price from $1.29 to $5.13. And that's going to bring the market cap from 308 million to $926,686,938. And at that point, my $50,000 is going to be worth $150,000. So at that point, I'm taking 50K in profits. So now I have 50K in profits and I have $100,000 left still in Pendle. So at that point, my second take profit is going to be when they do a 5x or appreciate by 500%. That's going to move the price from $5.13 to $25.65. And that's going to bring the market cap from 926 million to $4,633,434,690, right? And now at that point, my 100K will be worth 500K. So at that point, I'm going to take $100,000 in profits. And as you see, guys, the more the market goes up, no one knows when the top is, but you know it's coming. The more the market goes up, the closer it's getting to the top. So the more the market appreciates, the more I'm taking off. So I'm taking off 100K from 500K. So now I have 150K in profits over here, and I have $400,000 left in Pendle. So now my third take profit is going to be when they do another 5X. That's going to bring the price from $25.65 to $128.25. And then that's going to bring the market cap from 4.6 billion to 23,167,173,450. That's going to turn my $400,000 into $2 million. So at that point, I'm taking off half. I'm taking out $1 million. So now I have $1,150,000 in profits, right? And I still have $1 million left in the position. If you do the math, I just showed you how you can turn $50,000 into $2,150,000. So now you're probably asking yourself like, okay, what do I do left with the 1 million? Well, remember I said that I feel like the market cap can go up to 70, but I'm not sure. So given that is like right under the $30 billion market cap, what I'm going to do is every time it appreciates 50%, I'm taking out 50% in profits recurring. I'm just going to mark the lines on the chart so that way I don't have to think about it. You want to set your plan up so that once it hits your price, you don't have to think about it. You don't want your emotions to be involved whatsoever, because you're probably just going to justify a reason why you think it'll keep going up. When the bull market's happening, it's all good news coming out and it seems like everything's just going to be great forever. But what goes up must come down. All right, so here I am on the Pendle Finance chart, and all you have to do, you zoom out here, you can see all my take profit strategies. So all I have to do is wait until the market hits my line, and I can either sell it myself by putting some notification on my phone, set up some kind of limit order, or I can use a yield farming strategy that allows me to provide liquidity in a certain price range, and once it hits a certain target, it can take me out of the pool. So now that we've covered that, let's cover my yield farming strategy so that you guys can see how you can accumulate Pendle passively so you can have more to sell once the price targets are reached. Most of the time for any project, you can see like where the most liquidity is. If you go on here in terms of decentralized exchanges, you can see the best pair is Pendle wrapped ETH on Uniswap v3. So what I'm going to do is I'm going to go to Uniswap, I'm going to go to pools, and I'm going to search for Pendle. You want to look for pairs with high volume to TVL ratios, meaning this top one is better than this bottom one. Why? Well, the TVL is 174,000, but the volume is 17,000. But here, the TVL is 162,000, which is smaller than 174, but the volume is 136,000. So you're gonna make way more money. So I'm interested in this 0.3% pair. So now I go back to my chart and I want to see like, hey, what range do I want to provide liquidity in? And what's important to know is that the wider your range, the lower your passive income, but the lower your risk also. The tighter your range, the higher your passive income, but the higher your risk, because like let's say my range is these green boxes, which it is. Whenever I go outside of them, I experience what's called impermanent loss. If I go out to the upside, I'm going to be in 100% ETH. If I go out to the downside, I'm going to be in 100% Pendle. All right, but here at Know It Alls in our course, we show you how you can use impermanent loss to be your friend. And that's kind of what we're doing in this strategy. Like, not only do we want to generate passive income, but we want to use this as a method to take profits in ETH. So you can set up multiple tranches where you go from here to this green line, this bottom green line to maybe here, the bottom green line to maybe here. And you can use something like Pendle Finance to where as soon as it hits your line, it's taking you out of position with all of your ETH plus your Pendle and ETH fees, right? So you just got paid passive income to take profit. But as far as yield farming position goes, let's say I want to provide liquidity from this range, all right? And let's say I want to see like, man, if I was here for the past 60 days, how much money could I have made? So all you do is take these numbers, this bottom one, this is the minimum, and then the maximum. You come back here to builder metrics and you put it in right here, the minimum and the maximum. I already did the liberty of doing it for you guys. So off of just a $1,000 investment, you could have been making 94% APR in the past 60 days. It's pretty good. And per month, you'll be making you would have been making $77.83, $912 in ETH, $87 in Pendle. All right. And, you know, another thing, like when I'm considering risk management, ETH is not only a safe hold, but it's a hold that can get me a lot of gains. So if I'm going to buy an altcoin, especially a large amount of my portfolio, I want to make sure that, or not make sure, I want to develop a thesis as to why I think it's going to outperform ETH. And that's why we look at ratios. This chart is Pendle compared to ETH. If the chart's going up, that means Pendle's outperforming ETH. If it's going down, ETH is outperforming Pendle. So why do I think Pendle Finance is going to outperform ETH in the next bull market? Abso-fucking-lutely. Why? Well, Ethereum is already a multi-billion-dollar market cap. Let's check right here. Ethereum's market cap is already $265 billion. So in order to just double your money, it has to be another investment of $265 billion. But Pendle's market cap is only $308 million. So there only has to be an investment of $308 million, which is way smaller than 200 billion plus. On top of that, just their use case and the problem that they're solving, and they weren't around the last bull market, so they haven't had their time in the sun yet. I firmly believe that Pendle Finance has a chance to be a top 20 for sure, maybe even a top 10 coin. So I feel safe holding Pendle over ETH, but also taking profits in ETH. And if you look up here, it gives you the price volatility, the volume to TVL ratio. It gives you the average fees, and it gives you the risk. This is a low risk pool, which I like very, very much. You know, another important thing to note is that, you know, hey, if you feel like you can get a better yield somewhere else, like this is it's good to provide. I always say you never want to provide liquidity for any asset that you wouldn't hold on its own. But sometimes, like let's say, like for example, Pendle USDC. There is no pool for that because, you know, there just isn't. It's also not a bad idea to find another pool that's paying more. It can be matic and ETH, something that you don't mind holding. But if it's paying more and you already have like a limit order strategy, take profit strategy, you know, set up, but you still want to accumulate Pendle passively, all you have to do is set up another pool that's paying more, but also in assets that you don't mind holding if you experience impermanent loss. And then you can literally just take those rewards and use it to buy more Pendle or buy whatever asset that you're bullish on. So with that, I like to conclude this video. I hope you guys got value. If you did, consider subscribing, not just here to Crypto Noah, but also to Noah DAOs as well. We're going to be putting out a lot more content on real world asset protocols and just overall macroeconomics. So like I said, consider subscribing, drop a like, drop a comment. Let me know what other asset you want me to show you guys how to set up a take profit strategy for, what protocols you guys want me to review. So with that, thank you guys for watching. I love every single one of you. I hope 2024 is off to a great start, and I will see you guys in the next video. Take care.